Hey guys, welcome back to Bite the Book. It's been a while since I've broken down the chart. We're in a new year now, 2020. So let's get to it. Last decade has been massive climb to the upside as always. Now that we're in 2020, start of a new decade, new year. People are expecting, this market to crash since we haven't crashed in a long time. But anyway, enough of me talking. Let's go ahead and break down January 2nd and the 3rd. So, when was January 2nd? January 2nd was Thursday. Okay, perfect. Wasn't a whole day, but that's fine. We'll still look at the higher time frames and make our way down to the lower time frames in our New York session where we're going to be trading. So just get something right here. So perfect. So right now I'm just plotting all my pivotal points on the 4 hour, and then I'm going to be moving back down to the 1 hour, then the 30-minute, 15, and the 5, of course. So now we're looking at a 1 hour. Okay. Let me remove these if I could. Can I? Settings. Remove. Perfect. Second, nothing much happened except it went down, down, down. On the second, you could have taken a trade, I guess, after 8 o'clock around here in this area. As you can see from the 1 hour, looking from left to right, December 31st, pushed up, stalled, pushed up, back down, up again to make new highs and break previous resistance, and then pushed down. Right, it broke here. And it also broke here as well too, where resistance became support and vice versa. And then it came back up here to touch. So taking sales would have been, the most profitable position. And I feel like, strongly you could have at least made, 92 ticks off of this move to the downside. Now we're back up here in this area where support became resistance. Easiest way to play over here is to wait for it to create a new high, right, in this area, and then play the buys over here, or wait for it to create a new low around here in this area and then come back up to take sells. But anyway, let's go deeper into our time frames. So let me just add one more horizontal line over here to finish off the second and the third. Let's move on to our 30-minute. 30 minutes. Okay. So 30-minute looks great too. Personally, I don't know how I would feel taking buys on the third. These would be difficult buys, but it would be definitely profitable. Because for me, right, I like to take a $2.50 stop loss, all right, and then a $5, $6 take profit. But this would have easily been hit, right? Because look, we came back up to where support became resistance, and vice versa. Yeah, so that's the only real opportunity I've seen. Another opportunity could have been around 11 a.m. right? We have a new high over here, right? If we're looking directly to our left, right? Close higher than this, right, etc. Price came back down here, and then this could have been a buy opportunity. Even if you took it after the close and did a 250 stop loss, you still would have been fine grabbing at least $5-8. And then after that, after 12, it kind of just started to move sideways. Let's look at the 15, see if it shows the same thing. 15-minute, pretty similar too. Again, of course, the opportunity to take the position looks a lot more clear. So you know, price comes down, 930 hits. Let's say you stay out the position, price pulls up, you see that you made a new high, higher than this high, higher than this high over here. Price comes back down, right, where to a resistance, that's now support, right? Boom, goes back down, and then easy buys, which again will probably be, you know, easy to take after these closes. I think if I had taken a trade at 11, I would have done it after this bearish move, and I definitely would have been stopped out, which would suck. So one thing that I think I need to keep in mind is when I take the trade on a close, should I either wait for the pin bar or even just wait for it to come back down to the actual area, right? Because I could have even had like an order limit set up right here, where again, easy $10 move. But anyway, that's really the third. Let's take a look at the 5 minutes, see if there's anything that is more tradable. So 5 minute, same thing. On the 5 minute, this opportunity is a lot more clear, right? If we look at the back of the 15, it created a wick over here, versus on the 5 where we have a nice close. So taking a big bearish close, right? 250 stop loss, boom. You would have been perfect for a move back up, $10, however long, right? Because at the end of the day, we want to take it back up to the last high, right? Or even the last area up here. So again, $8 move easily. Let's just backtrack a bit and look at what happened over here, which is beautiful, by the way, right? Because it broke down, made new low, came back up to where support became resistance, back down, did the same exact thing, and then back down and continued all the way to the next low, which again is like a $28 move. So that's one thing I really need to be mindful of. For Sunday though, I'm looking for this to come back down here at least and give me any sort of indication of it going back up. I'll be trading a 1 contract on a Sunday and then a 2 contract for the remainder of the week, and then on top of that I'll only be doing 2 trades a day, whether it's on my phone or the computer, just to make it easy. Anyways guys, thanks for tuning in. If you have any questions, concerns, ideas, let me know. Thanks, bye.